Good evening, everyone. We welcome you to our 135th webinar from Resurgent India Limited. This virtual session is part of Resurgent India's knowledge series in association with SBI CRM. Friends, myself, Sandhya Tawar, I'm part of Resurgent Group, an advocate and CS by profession. And today we would be discussing on a very interesting topic, early stage funding, a safer choice for PEVC investments. Before we get into our session, I would like to introduce our eminent speakers for the session. So we have Mr. Rajesh Sehgal. He's a CFA managing partner with Equanimity Investments. Rajesh is a long-term investor with tremendous breadth and depth of experience managing early-stage investments, private equity, and public equity funds for over 2 decades. He has on-the-board experience across emerging market countries and analyzing various industries and businesses spanning different stages of their life cycle. Rajesh has the distinction of being the founding chair of the India chapter of CRUF, a global body set up in 2005 by users of financial reports, an open forum for learning about and responding to many accounting and regulatory changes that affect corporate reporting. He's a board member of the Mumbai chapter of TIE, which is the Indus Entrepreneur, a global nonprofit community that works to help entrepreneurs in all ways. At TIE, Rajesh is a co-chair of the Fintech Focus Special Interest Group that spearheads TIE Mumbai's focused effort to help the fintech community. He's a member of the board of directors of Apar Industries Limited. Welcome, Rajesh. Welcome to the session, and thank you so much for being part, of this session.
Thank you, Sandhya. Thanks for having me.
Thank you. Friends, next we have Mr. Amit Kumar, co-founding partner at Ah Ventures Fund. Amit is a venture capital investment professional, CFO and business scalability expert focusing on startups and SMBs. Currently, he is spearheading investments at Ah Ventures, advising companies on VC investments in the startup space. Previously, he was a partner at A&A Business Consulting. He led the finance consulting practice, strategic decision-making, and managed operations, driving the groups towards profitability. Amit has advised senior leaderships across MNCs and small businesses on improving operating margins and driving profitability. His expertise lies in the areas of business strategy, risk management, audit, systems and processes, and fundraising. As a founding member and CFO of a B2B e-commerce startup, he was involved in scaling up the business from a 4-member team to 300 employees and revenues of more than $50 million in a short span of year and a half. He also raised the first round of funding of $22 million in 2015. In the capacity of board advisor and mentor, he helped entrepreneurs incubate their ideas into businesses, formulating go-to-market strategies, launching products, and ensuring they work on sustainable business models. Welcome, Amit. Welcome to the session.
Thanks, Sandhya, and hi, everyone.
Next, we have Mr. Siba Panda. He's CFO at Stride Ventures, collaborative, tech-savvy financial executive experienced in fundraising, building finance departments, supporting startup divisions, commercial and operational support of strategic initiatives, management reporting, sourcing and analyzing deal flow, underwriting investment opportunities, and implementing ERP systems. Adept at process improvement, department reorganizations, and leading outsourcing initiatives in disruptive environments that achieve company financial targets. Big Four accounting experience and multi-level management experience. Welcome, Siba. Welcome to the session.
Thank you, Sandhya, for having me here.
Thank you so much. Lastly, we have Mr. Ashish Singhal. He's a CFO and company secretary at Core Diagnostics, a clinical data science company with a center of excellence in high-end diagnostics. a seasoned finance professional with 20 years of post-qualification rich experience and 8 years of exclusive experience in the healthcare industry. He has held many leadership and corporate finance roles in companies like Coca-Cola India, Baxter Healthcare, and many more. He leads the finance, legal and secretarial, HR, administration and procurement functions at core, with ultimate focus on creation as well as execution of successful financial plan for the company. His expertise lies in overall financial planning, tracking and management, cost control and optimization, strategy planning, project accounting and working capital finance, and turning loss-making ventures into profitable ones. He's a qualified CA and a CS. Welcome, Ashish. Welcome to the session.
Thank you, Sandhya, for the nice introduction. Thank you so much. Hi, everyone.
As we know that early stage venture has remained a popular choice for investors despite a dip in PE/VC investments in 2022. One reason for this shift is the greater scope for growth in early stage investments, which allows investors to take equity at a lower valuation and exit during the growth stage for higher returns. Investment in early stage is today a safer choice since most late or growth stage startups are burning cash and profits are nowhere in the picture. Private equity and venture capital firms invested $46 billion in Indian startups in 2022, a 29% decline from the previous year. It is predicted that this funding winter will last for another 12 to 24 months and will primarily impact growth and late stage funding for Indian startups. Some analysts believe that this funding reset was already in the making and would have happened even without the economic downturn. Startups are also looking for alternative sources of funding, such as venture debt, to meet their working capital needs. The webinar on the early stage funding will now, we will move into the session, and this session will throw light on its expected impact on the economy and will address the various pertinent challenges. So I would firstly want to ask Mr. Rajesh to please share with us that, how has the Indian startup ecosystem evolved in the terms of PCs and VCs investments over the years?
Sure, Sandhya. I'm going to pull up one chart that I have, and that will help me, make the point. So I think before we look at these numbers and go through what these numbers mean, I think suffice to say, and I think everybody on the panel as well as the audience will agree, based on what we've seen around us, based on what the bureaucracy and the government have done, and based on what the press keeps reporting, the private ecosystem, the private funding ecosystem, which includes private equity and venture capital, I think has seen an exuberance and a very elevated level of activity over the last few years. And these numbers that I have on the chart there, from 2015 till 22 calendar year, make that point amply clear. And I think, Sandhya, you made a very good point that compared to last year, there's been a nearly 25% or 1/3 of a fall from last year. But I think the way to read cycles is to remove the outliers, for whatever they're worth. So we were all very happy with the $40 billion that came in last year. But that was an aberration. It's not a normal part of the cycle. We are all very happy to see those numbers. But I think if you ignore the 21 big bar there, and then you look at the trend, I think the trend is very clear that I think we, as an Indian ecosystem, before 21 had formed a base of about $10-11 billion every year. I think what happened in 21 globally, and India was a big beneficiary of that. My view is that we formed a base of about $20-25 billion every year, regardless of whether the funding winter continues or the winter's shorter, and we see good times ahead as well. So I think $20-25 billion every year has become kind of a bottom. And this is not just because the numbers on a chart are showing that. I think it is simply that India has the Indian ecosystem and the Indian economy itself, I think, is coming into its own. We are all following what's happening at Davos very closely, and as we all saw that, there's really hardly any mention of China at all. but India has been spoken about a lot. In fact, the Indian government has gone to the extent of sponsoring a lot of advertisement and banners and other things to give more visibility to India there. So I think this is a trend, in my opinion, for the next 5 to 10 years, where India will remain at the center stage. And I'm very happy to be part of this early stage ecosystem, which is the maximum, we're just seeing the maximum growth.
Yeah, absolutely. So what, according to you, what is the future like of this prolonged funding winter?
Yeah, I think it's a cycle like any other cycle. I've been in the markets more than 25 years. So we've seen a lot of cycles. We saw the dot-com boom and the burst. Then the famous 2007, 2008 happened. And then 2012 to 13 happened. So we've seen a lot of these cycles. And I think this is just part of the cycle. You may call it, very interestingly, the funding winter, or you may call it the down part of a cycle, etc. As I said, we remain extremely positive about what's happening on the ground in India. And it's not just about technology and early stage startups, etc. I think it takes a whole village to grow a baby, as they say. So, you have to see development also in infrastructure. And over my few visits to cities across the country, every second city is dug up. There's infrastructure coming up, there's a metro being planned, there's, the highways happening, airports are getting renovated, new airports are coming up. So I think this is not just about us being very happy about what's happening in the technology sector. I think it's an overall India story. So from our point of view at Equanimity, the next 10 years, just remain invested in India. And, obviously we being very biased, please do remain invested in the early stage ecosystem. And if you are an entrepreneur, just take that leap, have belief, the ecosystem will support you. And these are the years of growth. You don't want to miss the next 5, 10 years. You have to participate.
True that. Thank you, Rajesh. Thank you for sharing your views on this interesting topic and beautiful questions. So my next question is to Amit. Amit, how will this funding winter impact growth and late stage funding for Indian startups?
So I think if you see from a perspective of what Rajesh has said, how it is going to get impacted, and there are different reports from different circles all coming in. Some people are talking about the fact that it is going to be for the next 6 months. And I'm probably more optimistic in this case than anyone else. I feel that at least in our stage, was extremely early stage till about $1 million or so. The funding winter was never there. In fact, there's an uptick in early stage investments to about 89% in comparison to 2021. So the growth and late stage funding did suffer. There is no doubt about it. And there are various factors that can be attributed to the same. But if you see that people talking about 12 months, 18 months, and analysts saying that, I think I am very hopeful it will not last more than 6 months or so. So, which means that it's not that you will come back like Rajesh would typically say about to 2021 levels, because that is an outlier and that is not the right way of looking at trends. But it will come down to decent levels when the uptick would have begun in about 6 months or so, which is very, very encouraging. In fact, January was not that bad. A lot of deals have started to happen. All the VCs generally come home, back home after their holidays around 7th, 10th of Jan, and they start working. But quite a few deals have been announced. If you go to any of these startup journals, whether it's Your Story, Inc. 42, which keep on reporting their deals, the deals have started to happen. Now, what will happen to growth and late stage companies? Well, like last year, for the next 6 months, at least the investors are going to be cautious. They're going to be evaluating deals more deeply. There is a lot of dry powder. There is no doubt about the fact. If you see 21, 22, lots of people have raised new funds. The older funds have also raised another set of funds, etc. So that is continuously going to be there. Now, trend-wise, a good investment manager is a person who is not always investing money, but whenever there is an opportunity of not investing, they're not investing, that also is a good investment manager. So staying away from investments also definitely helps. But for the next 6 to 9 odd months, VCs are going to be cautious. They will look at nice deals. They will take a little longer maybe to evaluate. but yes, they have enough dry powder to deploy, and we are extremely hopeful that it will not last more than 6 months or so. That's at least my reading of when I speak to people on the ground, or even the more optimistic reports are talking about the same. Sandhya, over to you.
Thank you. That was quite positive. Amit, according to you, what sectors are currently attracting the most PE and VC investments?
Now, whenever this question comes up, I keep thinking that why should VCs even think of having a sector which is attracting maximum investment? Is it that if one VC or two VCs are investing in some sectors, then everybody should be investing in those sectors? No, I don't think so. That typically is the trend. But there are certain sectors which we are very, very bullish on. I think in our portfolio, EdTech has done the maximum. We have got about 25 EdTech investments out of about 108 odd startups that have been funded from our platform. So EdTech in the last 3, 4, 5 years has been doing fantastically well. But if you ask me 2023, the sectors I would still pick, Fintech I will still pick, because the penetration, at least in the rural, semi-rural area, is still less. So that is the so-called underbanked people. Fintech will do well. Even Fintech will do very well in terms of small and medium enterprises. You know, there is a corollary, and people may talk about the fact that there are regulations around it and things like that. Those will continue to be there. But yes, Fintech is one area which we are extremely bullish about. The second we are bullish about is health tech. And when I say not only health tech in terms of people who are going into services, you know, whether it is telemedicine, medicine delivery, etc. No, we are also talking about some awesome, solid products in the healthcare space coming up. So I've seen a lot of product companies now, tangible product companies being funded, and they're doing great work, whether in terms of physiotherapy or gynecology. These are the companies which will do well. And in fact, the pandemic was a mirror to all of us, that the healthcare system in India needs to be up to a different level altogether. And that is why startups will play an extremely important part in innovation and new technology that is going to be used in healthcare. Third is ESG. I think everybody is talking about that fact. It's about environment, it is clean tech, it is EVs. In fact, we have also recently funded I have personally invested in 3 EV companies very, very recently, and touchwood, all of them have been doing pretty well. And they're all raising their second, third rounds also in a span of about 1.5 years, because India needs to move to EVs, but it has to happen in a staggered and a logical fashion. You just cannot today, tomorrow switch off petrol and diesel and move to EVs. So the third, I think ESG, very, very important. There are 2 more sectors I would love that investors get into it. They are, as of now, have kind of shied away from these ones because of regulation or otherwise. One is sports tech. I think that really needs a big impetus and support from the investor community. India is still not one of the most sporty countries, to be honest with you. When I say sporty, whether it's professional sport or people looking after their health, their fitness, etc. So startups are going to use a lot of technology to help people play better and get their lives better. Across the world, sports tech companies are doing really well, whether it is on the coaching side, on the player side, or in the infra side. And last, the 5th sector, which I really want startups to get into, and Rajesh brought that about, that every city in this country is dug up. I stay in Bombay, Rajesh stays in Bombay, and I have my office in Powai. Where I stay, it is about 35 minutes. I'm very happy about it. But whenever I hit a couple of roads in Bombay, I keep on thinking, koi bhi sarkar ho, but roads kabhi hamari theek nahi ho pati. So I think startups really need to be given that opportunity to enter into infra tech. Okay, abhi bhi flyover 5 saal mein banta hai, dusri jagah 3 mahina mein, 6 mahina mein ban jata hai. Why this is not happening is something, if we give that free hand to startups, I think, startups will do wonders as they've done in the other sectors. Sandhya, over to you. I guess, I could answer your question about the 5 sectors.
Yes, very well. Thank you so much. In fact, when you were sharing about sports sector, I was just thinking that this gaming industry is at a boom now, especially during COVID times and post-COVID. So yeah, a lot of scope in gaming industry, and the startups can actually think of investing in these sectors, especially the gaming industry. Thank you so much, Amit. Thank you for sharing your views. Now we move on to Mr. Siba. Siba, is the term funding winter is right in the current context, how the founders should navigate in these times?
Thanks, Sandhya. I think that's a very important question that you raised. I think as Rajesh showed the numbers which projected a chart, 21 we have a surge in the amount of funding, 22 we saw a slightly dip around 24%. But in any graph to analyze, it's always a median that you look at, okay, where it goes as a median. Now, why do we need to compare between 21 and 22? If 2020 could not have been a COVID period, that funding could have happened in 2020. So is it a shift of funding from 2020 to 21, which showing a dip in 22, or is it a real slowness in the funding? That's something is a common question, right? Now, if you look at the other side of it, from a SEBI, who is the authority to allow an approval to run a fund, if you look at 21, 22, there have been a 20% surge in number of funds getting registered with SEBI. That's another fact which says, there is ample amount of fund available. And if it's a winter, if you use the term winter for the business or the startup, isn't it the fund managers are also in winter? So why do you call it as a winter? No, I think that's where the term may not be correct. No, people love some words that's been used, which is publicly available. But in the economy, India is third largest growing economy in the world. It's picking up very rapidly. All of the world, if you look at, there is a large amount of confidence which is shifting to India. Compared to whether we talk about China or Europe as a market or US as a market. Given all the different parameters or the kind of government initiatives there, I think there is no slowness in terms of funding. We have seen funding happening in the off periods, which is typically the year-end periods, which Amit mentioned. We have seen the funding happening to good companies. I think as a VC, what we are looking for is quality assets to invest in. We always look at the kind of business model or idea people are going to drive. We always look at how scalability that is, how sustainable that is going to be. It's like, if you are in a race course, people put money on a horse rather than, who is on the podium, or the other way around. It's like we always believe and look at the sustainability of business model and who is going to run it. If there is a good idea, every VC will love to look at it, and we don't look at whether there is a winter or summer. I think that terms are not very right, which is getting published in media, various sources, which is available to people. Let's for the community, I'll say, look at this way, how others are playing it. If you can make a difference vis-a-vis to your competitor, or if you can make a difference as a new product line, then you have dearth of funding.
Right.
Well, over to you, Sandhya.
Yeah. So on this term winter, I just want to share a very beautiful quote I read somewhere, that winter always turns to spring. There's no chance that spring will not come, or winter will always be there. So let's see that in that perspective.
Absolutely.
Yeah. So next question to you, Siba, is that does the approach towards investment is any different? And if yes, what is the impact?
Yeah. So I think now if you look at last 6 to 8 months, when people started calling it as a winter, though I don't love the word winter per se when it comes to funding. In the ecosystem, there are different stages of companies. There are companies who are early stage startup. There are Series A, B, C, and D above companies. Now,
right,
within that, you have sectors. Within that, you have innovative or ESG oriented companies. Now, within each bucket, there are pockets who are getting funded well. There are pockets who are not. if you look at a specific segment, which is the late stage or growth stage companies, there have been some companies who have run through a troubled water recently, which allowed to think of or refigure how can this be minimized. When we talk about that, it went into a larger due diligence per se. What Amit just mentioned in his previous conversation, that VCs might be taking a slightly longer time. If it's 15 days earlier, it could be 20, 25 days. But the things are there, it's happening. It's not shut. The doors are not shut, right? So there are few large unicorns who are very media, has not built in that confidence with the investors at a late stage, which is kind of percolating to the early stage also, because early stage they have a different challenge sitting with. They have to prove themselves. Their business has not been proven to them. So at each stage there is challenge. Early stage the founders has to prove the business model, has to prove themselves. The late stage, the challenge is to keep the confidence or momentum going or rising in line with the VC or commitment. So that's where the dilemma is. It's the impact of someone is getting percolated to someone else. So in a way, if you look at in a nutshell as a together, the funding rounds are available, may not be, at a time what you're looking at, may not be at a valuation what you're looking at, but it's there at a right price. And everyone has to prove it to get it.
That's true. Great.
Over to you.
Thank you, Siba. Thank you. So now that we have recently spoken about the booming healthcare sector, we have Mr. Ashish from Core Diagnostics, and I invite Ashish to please share what strategies can Indian startups employ to effectively manage and reduce high cash burn rates. Over to you, Ashish.
Yeah, Sandhya. So I've worked with many startups, education, healthcare startups too, for many years, and having like worked in these startups, I have been brushing up my knowledge, and it's like how to effectively manage a company, how to control cost, what is the mindset of the entrepreneur when they get the capital. So I'll tell you, first of all, there is an idea which entrepreneur embarks, like this is an idea. Then we have to add commercial element into it, that this can earn money also, and we go for the first round of funding. While go for the first round of funding, we create a picture very good, like the promoters spend endless nights to create a very beautiful model that it can touch the heart of the investor and they can get the money. But what happens after the money? Like they have just described all of that in a projection or the idea narratives, PPTs, beautiful PPTs can be made. After getting the funding, they lose sense of the money, whereas they should think that money is the main thing for which they were striving. It can generate a tremendous value, but what happens is like it might be spent into the parks or the facilities. They get to move into the bigger office space. They beautify the office space. Simple example, instead of plate glass, they will say toughened glass, this type, that type, not this tile, that tile. Now we have got the funding. So whole abuse of that money happens. Second is type of the CEO who runs the organization. One, I've seen majorly two types of CEO. One is marketing oriented. Second is Lala or businessman, typical businessman. What marketing person will do, they will create a good marketing platform, good digitization. Their whole idea is not to turn the venture into profit, but to add value so that they can sell 100x 400x whatever x. इसलिए आपने देखा होगा जोमेटो का इशू आया, करोड़ों में बिक गया, मल्टीपल्स काफी थे. So digitization and marketing. So I'd asked many CEOs like, why are you spending this in marketing so much? this is optional funding, you can cut down the cost, this is in our control. But yes, we have to, everyone should know the company's name. That's why we are doing this, is very much necessary, and at the cost of the burns. Like already we are into the burns, then this marketing burn also happens. But versus if Lala or the businessman runs, it's a completely different show. They have learned the value of money over the years. What is the 1 rupee means for them? So like if they can understand that value since time beginning, then they can add a lot of value to it. And then they learn the mistakes, then they learn how to run the business. They keep on, so like one of the good example is getting ERP also implemented at 1 crore rupees in 1 or 2 years, hence the after the funding, which is a very bad idea. Your SOPs are not in place, you don't know how to manage a company, your processes will grow, you will sell different products. Why are you bringing ERP at the nascent stage? You are killing the money by bringing that ERP. So first of all, we have to smoothen our process. And then like they don't hire experts to control the cost. They just do the plastering over the thing. And secondly, budgeting process. Initially, it is a budget prepared for the getting the funds. Then it is a bottom-up budget. Bottom-up budget, what happens? People will say people want to be very safe under the team. Like promoters don't know how to manage a particular thing. They have to depend on the experts. They will say, okay, we need this and that, these many manpowers at the cost of the business. Sales will grow. Yes, we will grow sales, no problem. But we need the people. It's a chicken and egg story. Then later on we learn that this bottom-up budget has led into the losses. Then we should implement top-down approach. We have to say that, though, no, this is the budget. Come on, you have to remove your people. You're not delivering anything. You're just killing time. So that is the thing. Two more most important thing are discounting policy and procurement policy. If those are not defined well, I've seen many people juggling into it, not finding a solution. How to capture the market, how to run fast. They don't know how to do it. Secondly, like salaries, perks, then measuring the productivity, wasteful repair maintenance, wasteful welfare expense, like offering free lunch to the employees. Maybe after that, cutting down the lunch, then it will also create a demotivation among why company brought now they are removing it, all of that. So like travel policy, everyone. So like I've seen promoters flying to the international markets for the business, and they are like also like it might be done in a more effective manner. Direct cost is the main driver which can bring operating leverage. Like if there is a batch costing, then unfulfilled batches might increase the cost of the product, cost of the sales, the production. Then wastage are not controlled. People are not trained. They handle material very like in a very careless manner. They waste the thing. Then people are the procurement team, the admin team. They are bringing their own suppliers. 3 quotes are matched. Yes, कंपनी पॉलिसी के हिसाब से 3 कोड्स आनी चाहिए, ये लो 3 कोड्स, वही 3 सप्लायर होते हैं, वही 3 कोड दे रहे होते हैं, एवरीथिंग इज सेट, प्री सेट, and we are not doing the e-tendering system there. Nobody knows how to. So all these are actually ends up. So now what we have done here is like I'm also coming from a startup. After pandemic, we have recovered -50% EBITDA to -5% in last 2 years. We have created 500 pointer profitability pointers to turn the company into profitable, and we have to grow because it's not a startup, it's a growth in the growth stage now. And if we are, in my company, we are delivering the high-end cancer test. It makes a while. So like in other diagnostic, they are running routine business is very simple to run. But when it comes to oncology, doctor also need the high expertise. How many codons are there in the BCR-able test? Nobody is able to explain. So yeah, over to you, Santa. So have I answered correctly? You can say.
Yes. You very rightly mentioned, on the extra agendas, these startups are doing, and they were just spending money which they have raised from investors into, making things luxurious for themselves in office. So money saved is money earned, basically. So if you save the money, you will not have to run after money, before the investors.
Yeah.
So thank you so much for sharing your views on this. So in any sector, government plays a major role. The support from government is very, very important. So when we talk about MSMEs, these startups, so what are the government policies and programs that are in place to promote the startups?
This is a very interesting question, and I love to answer it because we are also in MSME. I know the pros and cons of all the MSME. I'll just tell you for the listeners, like there are three types of MSME enterprises according to the MSME Act, which is micro, small, medium. Micro is actually up to 1 crore of capital investment. Small is up to 10 crore and the medium is up to 50 crores. And the turnover, the revenue of the to fall into the micro bucket is up to 5 crores, then in the small 50 crores, and the medium is up to 250 crores. This definition has recently changed. Earlier it was very small. Now more and more companies are registering into MSME, thinking that they will be getting boons and the very like great benefits of entering into MSME. But I will tell you, it's a mixed bag for some people or some entrepreneurs, or the like a person who has just started, who doesn't know anything, he wants to do some skill building. MSME schemes are doing very much good for them. Government runs many skill building programs, and there are centers where they can be trained. So, but as I said, is a mixed bag. I'll come to that. But first of all, I'll show you is like what are the benefits actually, what the government has really done. So like one is the many programs which are running. There is a PM Mudra Yojana where individuals can get up to 10 lakh rupees loan. I'll just tell you the example. These limits and the rates of interest, these are changing every day. It's like one has to be abreast with the MSME website, msme.gov.in. There is a PDF book over there, 400 pages, which describes the MSME schemes according to the different industry types. And it's very detailed. You have to do the whole like the research on it to get into the what are the schemes available according to you, which suits your need, and then accordingly apply. Then there is a CDB, a Small Scale Development Bank of India, CDB Growth Capital and Assistance, just like seed capital, which there's a criteria of 3 years profitability and the 2 years good banking relationship. They can get loan up to 25 lakhs at the PLR plus 3% approximately. It's a kind of soft loan and subordinated debt. Then it's a composite loan, which is up to 50 lakhs. It's secured. It's very much secured. Then to remove the hassles of the filings, there are many filings in the MCA and other acts. So there is a certified filing center which they have now started, which can help the MSME to know what are the things available. Then there's a fast track exit mode, which is also available. Then there is a MSME Act section 15 to 20 of chapter 5, which describes if payment is not done within 45 days, then 3 times the bank rate compounded that can be charged by MSME from another company who doesn't pay the debt.
Sorry to interrupt you, Ashish, here, but this 45 days period sometimes acts against the the supplier, basically, because sometimes corporates, they do not hire MSME registered entities because they are then bound to pay them within 45 days. Otherwise, they will have to pay the interest. So this sometimes, rather than acting on the advantageous side, it acts as a disadvantageous factor for them. Yeah,
people deflect the MSME because they will ultimately, these are the interest charging engine. Like they will just I'll say not take the payment. They will extort the payment on time ahead of the customers when they are recovered from the customers. Secondly, if we are talking about this, then if we are MSME and we are also taking the goods from another MSME, then government is silent. That act is silent because we have not got the payment from the customers. Then how can we pay to the other MSME? So it's about what MSME has right to claim from thinking that other companies are large industry or the public company, but MSME can also deal with another MSME. We are all dependent, but government should introduce something to safeguard this thing. Secondly, like our company and any other company might have to deal with the government. Government has framed all these regulations, but government is very much silent and blind. I would say that they should protect MSME, but they want MSME to suffer actually, because for last 2 years, we have not got payment from the government. It's very simple. Business has to collapse, it will collapse. But we are doing our internal thing. We are taking loans. We are taking other capital to survive the business. We know the capital will come, but when it will come. So if we do, so there is a MSME Samadhan scheme also, where we can lodge the complaint also against the government. But who will take the panga from the government? So like they are supreme authority. So like the dilemma which we are facing, anyone else can also face. I was talking to my friend who built in the Sulabh toilet scheme. They built 1.5 crores civil work. They did, and they are asking payment from the government, UP government. They are not giving it. So it's just like that. I don't know why they are not paying, creating the several paperwork, or every day there is a new officer, every day there is new kanun comes, and in the gap of that they are not just paying. And we are MSME, and we are asking from the regulation makers, please pay our money. They are not, they will show that, okay, we are also working in office where there is no electricity for many months. Our electricity has been cut. So if we have not got the money, how can we pay you? They have not got the funding. So this is about it. And other than this, like there is a R&D funding from IIT and all, but as I said, the idea has to be very good. It has to win the hearts. And then they will say, no, your idea is not good, or whatever. It does not give the welfare to the public. Then another thing is government e-marketplace, just like Amazon. But the search engine is very weak. Means like it does not add up the purpose. Then there is a bill discounting, which is 8% on the personal bank guarantee of the owners, 1% processing fee, 90 to 180 days time. But that also is into the problem, because then you need the approval from the customer that, okay, I want this bill to be discounted. Ultimately, that customer will pay the banker. So the customer will want to give approval. If customer is a government, then they will close eyes. We can't do anything. So it's also fruitless. Then there is a government also gives the concession in the IPR filing fees and the credit rating. If you are getting a credit rating, they will give you concession. These are good things. And then 358 items have to be bought exclusively from the MSME. There is a tendering process in which 20%, if we are not L1, we are MSME, we are not L1, then 20% of the total tender value can be availed by the MSME based upon the agreed prices. There is a full chapter on that, what that benefits. Then there's exhibition halls, we can take benefit of that. There's a microfinance, credit guarantee, ISO certification may help karte hain. So all these things are there, but it's a long list. And if we talk about anything when it comes to the finance, getting finance from the nationalized bank is easier than getting it from SIDBI or the microfinance and all that, because there's a lot of paperwork. They're not concerned about it. They want the application in this format, that format, CMA data, this projection. You have to be profitable. Agar hum profitable hote to hum aate kyun? For what purpose you are set up in the parliament? So like, so whole purpose is lost actually. And I would say that if the one thing which is a payment, which is the lifeblood of the thing, if that is resolved by the government, it will be a major step. MSME में जो 45 days का जो कानून है, 6 times 3 times the bank rate. If we have to take funds from another MSME, like we have to pay to another MSME, then what is the solution? If you have to take funds from the government, there should not be any complaint from our side to the government. Government should proactively give our funds, not even like single reminder. If they are saying 30 days, it has to be 30 days. But they enjoy 500 days credit. This is the scene. So whole system has to change. Otherwise, MSME will collapse. One of the chat I was reading, that business will damage. So that is true, because government has made this ministry, they are using our taxes to pay these salaries of these people, but the regulation is all hollow. It's like it's not actually coming to the rescue to anyone.
Yeah. There are lots of policies and programs which government has provided to MSMEs, but actually availing fund from the government under these policies and programs, that becomes a challenge for the startups. Yeah, very rightly mentioned, Ashish. Thank you so much for sharing your views. Amit, I would like to ask you on the valuation side for startups. So how have valuations for startups changed in the current PE and VC investments landscape? Would you like to throw some light on this?
So, very interesting question and very subjective, honestly, because whenever we talk about valuations, if you see the trend, generally people will talk about the fact that there have been discounts on valuations. Now you can get the same investment, with lesser money in terms of the equity percentage. I'm typically talking about. People will talk about 15 to 25% lower valuations in the market, etc., etc. But I think, like Siba was mentioning, if you want to do a good investment, and obviously it is a two-way traffic all the time. It's not that only the startups want investments, the investors also want good companies. At that point in time, whenever you sit across the table and you are doing a negotiation, then whatever investments do come in will come at valuations which both the parties would typically agree. But in terms of the trend, yes, I will definitely say that the valuations have got impacted. There is no doubt about that fact. And I really hope that, as I said previously, that this trend should reverse soon. And, startups will start attracting money at the same kind of valuations they are kind of expecting. But it will be very prudent at this point in time to also have use of Rajesh on this, because, we are in extremely early stage, but they also do growth stage startups as well. So I would love to hear his thoughts also on the same.
Sure. No, I think more or less in line with what you're saying, Amit. It's no difference. Thankfully, when you look at the entire spectrum of technology companies in India and the money flow that's coming into this ecosystem, and I think you touched upon it earlier as well. The very early part of that ecosystem has not been as impacted as the late stage has been, And I think that's very obvious because the late stage ecosystem is very closely correlated with the listed markets. And we've all seen what's happened in the listed markets. So the fluff in the valuations and the whole euphoria in the ecosystem was largely concentrated towards late stage companies. And therefore, we've seen a huge, meaningful, just a second. Huge, meaningful correction there. But that's not happened. That's not happened in the early stage of the early part of the ecosystem. So deals are happening. I shared some data. Let me just put that up again, because what that shows you, not just about the numbers that came in, but also if you look at the other bars, not the bigger ones, the number of rounds, So if you see the last 2 years, 21, 22, they've both been more than 2,000 rounds of investment in the ecosystem, So that goes to say a lot. So even though per deal value must have come off, the number of rounds that happened is still remained constant. And even quarterly, if you see last few quarters, last 3 quarters, you see we are above 500 deals, number of rounds. So the situation is not that dire, situation is actually pretty good.
Right. And one thing on the valuation, because, these are early stage startups, they sometimes what they do, they came out with their own valuation without hiring a registered valuer. And they go to the investor and, sometimes they got the funds also. But when, they make all the filings with the Minister of Corporate Affairs, there they get a challenge because their forms didn't get approved from the minister because they have not got the valuation done from a registered valuer. So there they face a challenge. So, for all the startups who are with us right here, right now, so I would like to share that, you have to get valuation done from a registered valuer.
Yeah.
See, Sandhya, if I may add to that, valuation itself, if you look at the history of financial theory and how we started valuing businesses, this whole DCF and all these things, they're about 60, 70 years old. So it's not a very old science, it's pretty recent. And if you look at valuations of early stage companies, it's even more recent, right? And as we all know that, even when you value a large listed big corporate like Reliance, Infosys, TCS, the bigger guys, as 70, 80% of science and 20, 30% of art. There is a lot of subjectivity that goes in there. 20, 30% is very relevant. When you come to our ecosystem, the early stage ecosystem, I think 70, 80% is art. It's a whole lot of subjectivity here and very little of science. But to your point of getting a valuation done, valuation exercise done and all that, I think it's very, very important. Not only for startups, I think it's important for investors as well.
Yes.
So from a tax point of view, whenever, if you're an angel investor on the call or you're a VC, etc., we all do get valuations done. And I think There's no point in cutting corners as far as getting a valuation certificate is concerned. Please do always insist on a valuation certification done by a merchant banker, etc., who SEBI is approved of.
Right. Absolutely.
I would say that, yes, as Rajesh rightly said that it's all art. I agree with that, because means like if you see any BSE or NSE company, valuation change every second when the price is changing. But when we are creating a model, the business model for 5 years, it has to also change like every second, but it cannot change because there's a lot of hard work which is going into it. I've myself prepared 50 models in the COVID times. Every day there's a lockdown released, the problem of the reagents and people not, we are losing contract, we are gaining contract. Every day valuation changes, but it cannot be transformed into a model. So, yeah.
Yeah. And one more thing I want to highlight here is on the documentation part. So when an investor is coming into the company, into the startup, it's very important to document all the terms and conditions. And for that, please do not go by, the Google drafts. So it's better to hire experts and consultants to, like chart out all the roles and responsibilities, the obligations of both the parties, because there might happen, that you may not be in good terms with the investor after like 5 years down the line. So how would you take care of your company, your business at that point in time, because business hamper. And there is a reputational risk also, sometimes investor exit also. So there has to be a proper exit mechanism in the documents, the funding documents. So that's another point I just wanted to bring into notice, to all the startups who are with us right now. So one question I would like to ask to all the speakers here. Do you think early stage startups are a safer bet in India? Please share your views.
Yeah, I think if we talk about early stage startup, if idea is excellent, and means like if the investor also works closely with the management to brush up and commercialize and grow that idea, then it is a good sense to do. Otherwise, if investor just puts the money thinking that promoters will do wonders, they might be at a mistake, they might be at a losing money. But I would agree that if money has to be put, it can be put in the startups.
Would you like to share anything, Amit, Rajesh, and Siba?
Right. So, yeah, Rajesh, go ahead first. No problem.
Sure. See, I'll tell you, I mean, you've got to keep things in perspective. If you look at a business life cycle, mature businesses by definition are a little more safer compared to early stage. We all keep talking, and there's a lot of data to support that in the US, in Israel, China, even in India now, that 6 to 7 of every 10 startups don't really make it big. So of every, in my opinion, of every 1,000 companies that we see, there'll be 1 or 2 unicorns. That's like an optimistic scenario, and that's like really hitting the jackpot, right? That doesn't mean that you're not successful if you're not a unicorn. But I think of every 10 companies that we see, it's safe to say that 1 or 2 will be widely successful. And I think that's a very great statistic. So by definition, the risk and return profile of early stage ecosystem is a little higher compared to late stage, which is a little higher compared to fixed income investments. You can't compare these investments to what you go to a bank and make an FD. So the risks are higher. But then the good thing about early stage is that SEBI has been very clear and categorical about the kind of people who can participate. So if you understand the risks and then invest in the early stage ecosystem, I would really go to the extent of saying that the risks in that ecosystem have come off, because a lot of institutional participation, a lot of regulatory institution framework is now in place. So per se in that ecosystem, the risks are lower. But if you're a fixed deposit investor, for you, early stage is going to be extremely risky. Sorry, Amit, go ahead.
Very well said, Rajesh. I think I will always go on record to say that, yes, this is one of the riskiest asset classes when you are doing early stage investment. There is no doubt about the fact. It is very addictive. It is very, very adventurous. It is great fun. I always put into perspective that there is decent amount of euphoria and madness in the entire thing. But if you put method to the madness, then it becomes a nice balanced way of investing startup money into startups. We have seen, and the statistics are fantastically shared by Rajesh. We have 85,000 odd companies or startups in our country right today. That was even talked about on January 16 during the National Startup Day. And we have close to about 110 unicorns. And if I'm not mistaken, now less than 100, because some of them have fallen off the unicorn status as well, just because of valuations going down, and more importantly because now $1 billion is more than 8,000 crores and not 7,000 crores. So that also makes an impact out there. So whenever you are doing early stage investment, whether you are an individual investor, an angel investor, even a VC fund, etc., or a micro VC, does not really matter. It is going to remain a risky investment, and like Rajesh said, higher risk always entails higher returns. So the ratio is definitely going to be in your favor. But whenever you are doing that investment, at least at an individual level, I always think it is as an expense and not as an investment, because like you said, 7-8 startups out of the 10 are not going to see the light of the day, maybe beyond the first and the second round of funding as well. So be cautious when you are investing in early stage startups. And if you have 100 rupees to invest, please do not invest 50 rupees. You may invest 15 rupees out of that into early stage startups, and I think you will have a balanced portfolio. Sandeep, over to you, and thanks, Rajesh. Lovely inputs on that one.
Thank you. Asiba, would you like to share your views?
I think Amit and Rajesh said wonderfully summarized it. Just to add what Rajesh narrated, if you're looking at one unicorn out of 10, having 100 plus unicorn, look at how many companies we have supported as a VC, all this is put together in India. And if not India as a startup ecosystem, where in the world? That should be the question we're looking at.
Right. Siba, I would like to ask you one more point here. So how does India's current PE and VC investment scenario compare to other major developing countries? Would you like to share that?
So I think to answer that, I'll bucketize in two categories. One within India as a number, plus compared to the other economy.
Right.
Now, since we represent a venture debt as an asset class, so if you look at 21, 22, 21, we have roughly around 36 billion of VC capital, with 22 as almost close to 53 billion of VC capital investment in India, which is done in the startup companies. Whereas the venture debt deals around 600 million in 21, 22 is almost $1 billion plus is as in form of venture debt. That's the number we are in. Now, if you correlate with this number with the initial questions, I was always arguing it's not winter. No, winter is not the right word. So if you look at the kind of amount that's been in terms of volume, the venture debt deals has gone up compared to 21 in 22. Now look at the world as the major markets in the world. Venture debt as percentage of total VC, India is roughly around 3.5% in terms of percentage of total VC deployed. Europe is around 7% odd, and US is around 15%. That's the ratio right now in the venture debt asset class. Within that, if you look at, there was a time when Israel is known for developing more number of unicorns in the world or having more startups. Similarly, US is having a place right now. But all of the world, post-China story going down, India is sitting with a lot of opportunities, where even the investors of US and Europe, specifically the endowment funds sitting in US, are looking at India as a market to tap in through different forms. And that brings a lot of enthuse amongst the VCs, as well as amongst the startups, to look at the monies, not only the large family houses or VC funds in India, those who are coming from abroad to invest in India. And it's going to be a wonderful story as we look at in 2023, We already had a good start in January with a lot of deals happening in January itself.
Great. Thank you for sharing your views on that, Siva. So we have few questions on the Q&A box, and I would like to just take up few from these. So one of the participants is asking, we can browse subsidy loan, but subsidy equal loan amount interest calculating, so business damaged. The question is not really clear what exactly.
Actually, they want to say that, they have taken loan, they have taken subsidy, but subsidy is equivalent to the interest spent on the loan. So, a subsidy, so like, according to them, there has to be some subsidy on the principal amount also, what I'm understanding.
Okay. And the next question is with respect to conversion of ancestral village into a solar village. So the participant is asking, is it worthwhile to invest, and especially if it's your own money, to convert a village into a solar village?
I think anybody would love to do that. So there's also a question which was directed to me, saying that Amit Kumarji, have you invested something for the development of your ancestral village? Now, my ancestral village is New Delhi, so I don't think so. I can actually invest decent amount of money in New Delhi to develop it. Mr. Kejriwal will do a decent job of the same. But even if I were living in a village and this could be done, I would be more than happy to actually do that. If I were coming from a village, I would know where my ancestral village is. And if it's supposed to be done for turning that into a solar village, why not? I think if there's the right technology, every village in India should be turned into a solar village so that there is no dearth of electricity ever for any village that is there.
And why only converted it to a solar village? Why not convert it into a smart village, like smart cities, having like all the technologies and innovations in place?
Absolutely.
I think I'll just add something to here, Amit. I think it's a good question, but in the ecosystem, there are players who are responsible or who should be doing certain things at their own place. Now, government as a system has a wonderful hierarchy or mechanism to take care of these things. Now, if you're talking about a village, there is a panchayat system in every smaller village. Everyone is getting a good, ample amount of funding to develop all these things. Now, as an entrepreneur, what we can look beyond that? If the panchayat Raj as an ecosystem getting a funding from the government itself with a allocated portion every year, why can't they do it, those basic things? And as an entrepreneur should look into how we can improvise that. If they are putting a solar system, how we can get some monetization to the panchayat system and motivate them to do it. Look at beyond the boundaries, not just looking at one traditional approach. I think somewhere the approach needs to be changed for a lot of the people in this whole hierarchy. We should not be looking at something to start with. Do something which makes sense or which adds value. That's where we should be looking at.
Right.
I would say that some activities are left for the government, and they take taxes from all of the businesses and individuals, and they are responsible and accountable to develop India. They take taxes. So they should play a vital role. Our work should be to make them accountable to do their work properly in a time frame manner. Any individual can turn, but to what extent? If Reliance comes into the picture, then it's a different show. It's like they will have to convert it into a commercial idea. They need money. Nobody will spend money from the pocket, which government should have spent.
Right. Yeah. In fact, in the chat box, also a lot of attendees have, said that they need support from government. They need funds from government. Yeah. One more question in the chat box is with respect to electric last mile connectivity. So they are asking about what are the views on the electric last mile connectivity venture?
I think before that, Santa, one beautiful idea which came into the mind, because a lot of people are like having problem with the government. The government should introduce a system faceless, just like they did in income tax or RBI. They should introduce a system to send the bills on that portal, and they have to be paid with interest without asking to the people, so that they don't suffer. They should not spend 50,000 to take a taxi to go to the government office, again come, then spend hotel rent also. It will be a huge saving of the small type entrepreneurs to get the payment easily from the government. It's a high time for the government to think about it.
Right. Absolutely. So they're asking about views and advice regarding fintech opportunities in tier 2 and 3 cities for medium and small scale merchants. And then after that, there is one specific question to Amit. They have actually mentioned it specifically for Amit from our venture. So I'll take up that. But before that, please share your views on fintech opportunities in tier 2 and tier 3 cities.
I think Amit spoke in the beginning and he said that fintech remains a sector of interest. Yeah, I would completely second him. Fintech, there are a lot of companies in the fintech area which have grown very well over the last few years. And there is a section of folks who think that, okay, fintech is now done. My view is that fintech is just getting started. There's enough and more that is broken or there was actually never there. So the opportunities for fintech entrepreneurs for tier 2, tier 3 specifically are amazing, because all the fintech that we have now, the private, not the government UPI, etc. UPI is all pervasive. You go to tier 2, tier 3, everybody knows how to scan the QR code now, which is amazing, right? But I think other than that, there's so much more to fintech, and tier 2, tier 3 still, we've scratched the surface. So there's a huge opportunity there. So as an entrepreneur out there, whoever asked that question, if you're trying to address that market, I would say just go for it. But Amit, you must add something to this.
Yeah, interesting. I think everybody in the panel and even the ecosystem would agree that small and medium enterprises, they have been the backbone of our economy. If they were not helping the entire economy to grow, especially the larger companies also. So a lot of large companies depend on SMEs for their parts, for their consumables, etc., because they don't do it on their own. So they have been a major contributor for sure. Now, and these people, their financial management has not been the best always. And that's been the most unfortunate part. And when the financial management is not the best, then your finances or your financial statements are also not at your best, unfortunately. So then the credit worthiness or the amount of credit that you can raise or the capital that you can raise is always based on the document that you submit to anybody, whether it is a private investor or it is a bank or somebody who is going to lend you money. Now, that needs to be improved. If they are not ready to improve that, then technology needs to be implemented for people to look beyond that. And that is what startups are typically doing. They're not looking specifically at, say, the kind of CIBIL score or the credit rating, etc., of all these SMEs, but they're looking at what they need to really take their business to the next level. If you see the trend that is there in India vis-a-vis across the world, is like how Ashish mentioned that what does MSME actually stand for? It is micro, small and medium enterprises. Now the shift from micro to small and small to medium in India on an annual basis is very, very narrow, which means that there are very few companies which are moving from micro to small and small to medium enterprises. Across the world, the trend is different. There are a lot of companies in double-digit percentage that move. But in India, a very minuscule percentage moves. And that is primarily because they are undercapitalized. They need more capital to expand and grow their business. And if that happens, then the MSME sector will become a much larger contributor to the Indian economy. And more importantly, startups are only going to play this role. So all in all, I think in summary, they are definitely still so-called not underbanked, but they are not taken care of. Only maybe 10% of that has still been, the surface has been scratched, but a whole lot of things need to be done for the MSME sector for it to become much more prominent in the country. Thanks, Rajesh, for this, and over to you, Sandhya.
Thank you. Thank you, Rajesh and Amit. So this question is to Amit, to our ventures. Can startup which cannot show revenue on paper, but having strong idea, can can they get funded basis that
So-
strong idea only?
So as simple as that, if this question is directed to me, they will never get funded from our platform. I mean, we will never fund such a startup. Just an idea and not showing revenue. So we need to appreciate the fact that a business is only done for money and revenues and for profits. If somebody cannot show that to me, even on paper, then there is no point in even evaluating the business, because I'm 110% sure you'll never be able to achieve that in reality. So from our perspective, we don't entertain startups who do not show revenues. And I follow a very strong 3P principle in investments. The 3Ps are people, product, potential. Although I give a 20% to potential and scale and 50% to people, because like I think somebody mentioned, or Siba was mentioning, that putting money on the horse. But I think in our case, we put money on the jockey, because that's the person who makes the horse run really
Interesting.
fast. So we do that. And if you cannot, the jockey cannot show that he can make the horse run on paper, then I'm sure that I'm not going to fund that company for sure.
Right.
So
Business
there-
projections. Yeah. Business projections are very important. Like, how are you going to use that money in promoting your business, and not just fancyifying your office premise? So that's
More
very
than
important.
anything else, Sandhya, is the fact that how you're going to use the money and how much revenue you're going to generate by using it.
Generate from that money. Absolutely.
It's
Absolutely.
actually about the learning process. One idea strikes, and then means like it can earn billions. But making a financial plan, it's a really tough job. Means like if it is a doctor, they don't understand the simple calculations also sometimes. So like then preparing the whole budget, they have never seen the balance sheet in their life. They have to depend on the CA. Explaining the CA to make a budget or the model, it's also painful. They don't have time, and it's spending the money also. But if idea is good, I would say that the funders, the capitalists, they should come and sit on the table, maybe allow their people to work on proliferating the business model around it. They are experts into it. If they like the idea, see, one thing is sure, अगर मैंने कोई चीज बनाई है, उसका यूनिट इकोनॉमिक्स अगर मैं करूं, इतने का ये है, इतने का कॉस्ट है, इतना मेरा मार्जिन है इसमें, और ये मेरा है, इसका ब्रॉड ये ही सफिशिएंट है एक पूरा बिजनेस मॉडल बनाने के लिए. उससे ज्यादा कुछ नहीं है. अल्टीमेटली व्हाट वी शो इन आवर बिजनेस इज यूनिट इकोनॉमिक्स. व्हाट इन्वेस्टर्स नीड टू सी इज यूनिट इकोनॉमिक्स. आप कर रहे हो, ठीक है, हाउ मेनी टेस्ट, हाउ मेनी प्रोडक्ट्स, आपका पर कॉस्ट ऑफ एक्विजिशन क्या है सेल्स टीम का, कॉस्ट ऑफ सर्विस क्या है आपका एक प्रोडक्ट का. अल्टीमेटली एक प्रोडक्ट बेचने में मुझे कितनी मेहनत लगती है, कितना पैसा लगता है, वही देखा जाता है. बट इफ द बिजनेस इज ग्रोन at a later stage, it is very difficult to attract capital, because by that time you have already like passed that journey. Like initially you had idea, commercialized, profit, whatever, but after that you are into the high tides, and you are now you can't be saying lies. You have to be very much sure. And then they understand the need of cutting down the cost. They need capital. They have to now transform. Now they can't do say those kind of things. So this is about it.
Yeah. So Siba has to leave for some urgent calls. So I just want to thank Siba. Thank you so much for being with us and sharing wonderful thoughts on this beautiful.
For having me here. Sure. Bye.
Thank you. Thank you so much, Siba. So just one last question from the chat box. And so it's about, can anyone throw some light on PropTech segment? So over to the panelist. Anyone would like to share?
Yeah, so I'll quickly add my comments, and then the others can follow. I mean, we have done a couple of PropTech investments, and I think PropTech is just not PropTech per se, or say housing or hostels or hotels, etc. is just not PropTech. We're also running a mandate which is basically related to, I would say, PropTech/infratech. They're trying to now get all the suppliers of raw materials for builders at one place, so that architects and contractors can do a good job. So that also falls under the PropTech segment. I think the entire segment is today fragmented, not just the part where people are selling properties because they give it to various brokers, they give it to larger companies who are managing the properties for them. But also what happens when the buildings are being built at the back end. So the entire thing also needs to be really streamlined. A lot of technology that needs to be imbibed in that in the construction industry. So that also comes under PropTech. But we are very, very bullish on that space as well, because it falls under the infra tech space finally. And a lot of technology needs to be involved and imbibed in that as well. So yes, a lot of work is happening and it will continue to happen, and startups will keep on coming in. If you want to only categorize that PropTech into discovery of homes, discovery of offices, and then taking it or rent or buying, now there are certain companies which are doing really well in their own segment in certain geographical areas as well, which also is very interesting, and they're doing some great work. But I think when two things happen in this PropTech segment, which is reliability of the properties, that is an uptick, then that is great. And second, most importantly, the customer experience for me is good. I think those kind of PropTech companies will definitely do well if it's on the discovery space. But on the infratech space, a lot of things can be done, and quite a few companies are really doing well in that space. Yeah, Rajesh, over to you.
Sure. No, I think Amit has done a good job in taking you through various subsectors within what PropTech actually stands for, and I think each of those verticals have to be looked at by itself, and it's got its own dynamics and factors that propel that sector. If I just have to add something to that, I think simply speaking, it is again our belief that when you're investing in India in any technology company, etc., there has to be a mix of online and offline, and that's just the way India works. Whether we like it or not like it, you look at all the large tech companies that have gone public, etc. Everybody is now going offline, and even the ones that are not listed, the larger ones have to go offline because the growth in India comes from there. So it has to be a mix. And I think when it comes to PropTech, one of the important aspects is, again, Amit mentioned that it's about trust. Are you able to provide that service in a very reliable manner? And property being property, and across the sectors that Amit touched upon, I think there's a lot of touch and feel about it. You will never buy a piece of property, whether it is land, industrial, residential, commercial, whatever be it, without actually physically visiting or seeing or having a feel for that geography, that area, etc. So there's a lot of trust that has to be built. And I think any PropTech company that wants to be really successful has to figure out how will they integrate the offline into the online and still be very efficient and have the proper unit economics. That I think is something we should look at.
With this conversation of PropTech, I had two ideas, two need which can be, if accomplished, it will be a game changer for India's GDP. Like one is the e-bidding platform, which has the sector-wise expert suppliers, and they should have proper knowledge about everything. And secondly is about the how to how to ease up the business. If that can, and if we have to contact 500 suppliers or 500 customers in the country, I don't know whether they are existing or not existing, although many people are running that show. But if it will be at the clicks of the button that this person, this identity has filed these many returns or these many electricity bills in 5 months period, they are actually existing, then it will make a lot of sense to say that, yes, we have real customers. Sales managers are not actually telling you the incorrect things.
This sector, this PropTech segment actually looks promising. So let's hope to see more on this sector in the coming years. Thank you so much, and a lot of appreciation from the participants also in the chat box, and I would just like to read a few. Thank you, Team Resurgent and the panelists, for sharing your personal insights. Looking forward for more sessions in the coming times. So this means that we should plan more of such informative sessions on startups. And thank you so much. Thanks to each one of you for sharing, your views and thought process and, your experiences and the way you have been handling into this sector. Thank you so much for that. And a great thanks to our backend team, the people behind the scene who have been working, on the whole setup and everything for making it happen. So thank you so much, everyone. And look forward to have more of such sessions with Rajesh, Ashish, Amit, and Siva. Thank you so much.
Thanks for
Sanjay.
having us. Thanks, everybody. Pleasure talking to you
Thanks,
guys.
everyone. Thanks, Amit.
And
Enjoy
lastly,
yourself.
I would like to end this session on one of the quote from one of, the CEO of one of the startups. And he says, chase the vision, not the money. The money will end up following you. So thank you, everyone. Have a great evening. Bye-bye and take care.
Thanks.
Thanks,
Thank
everyone.
you.
Bye.
Good evening, everyone.